With the coronavirus severely impacting the U.S. and global economy, the need for liquidity is at an all-time high. Many business owners are beyond stressed out, having to lay off employees and not knowing whether they will be able to survive. In today's episode, we chat with Brock Blake, the founder and CEO of Lendio, which is the largest marketplace for business loans in the U.S. To date, Lendio has funded over $2 billion across over 100,000 businesses. We cover a lot of ground in our conversation, from how the marketplace serves Main Street businesses to Brock's own story building Lendio and the many challenges he faced along the way. We hope you enjoy the show. Brock, thanks so much for taking the time. Really delighted to chat with you today. Let's kick off with a brief overview of Lendio, if that works for you.
Yeah, great. So Lendio is the largest marketplace for business loans in the United States. We've funded over 100,000 business owners for $2 billion of loans on our platform. So what that means is we're not a balance sheet lender ourselves. We've aggregated 75 lenders onto our platform, lenders like Bank of America, American Express, OnDeck Capital, Cabbage, Funding Circle, and so on. And so it's kind of like the Expedia for business loans. As a business owner, and we're talking Main Street business owners, restaurant owners, and retail shops and manufacturing and so on. A lot of times they need capital to grow their business, and they have this dream they want to accomplish, and they go and apply for a loan at their bank they've been banking with for 10 years, and they get declined. Not because they're a bad credit, but because, most banks only really offer one type of loan product. And yet there are many different types of loan products that a business owner can qualify for. They can get lines of credit, term loans, equipment loans, AR loans, SBA loans, credit cards, and so on. So when they get to, if they go and they apply for a loan, they get to clients and not a great experience. What we've done is we've said, let's bring all these lenders into one platform. Business owner, you can come to us, fill out one application. We have all the integrations with the lenders on the back end, so we'll shoot that application off to the right lenders. They'll underwrite it and send back to us an offer or a decline, and then we'll present those offers to the business owner in a way they can comparison shop the rate, the term, the payment amount, and so on, and choose the product that's the best fit for them. And so not lead gen. It's we handle the entire customer experience, and we handle it all the way till it's a closed loan. And what we're really passionate about is helping that business owner. They get that loan. We have thousands of 5-star reviews, and feel like there's an enormous opportunity. So this round, after 12 straight quarters of growth and really outsized growth. And not really needing to raise money. We haven't raised money since 2016. We've been in a great position as a company. We felt like there's some opportunities in front of us that are enormous that we want to chase. And so we decided to pull together. We announced a $55 million round, which included equity and debt, and fortunately, good timing. And we're excited to go and be aggressive going forward.
Well, the market you serve is huge. If you think about all the businesses out there that have a need for capital, where do you find that your solution is most helpful? You talk about the business that goes into their bank that they have a relationship with and get declined. Is that, are you kind of focused on call it the lower end of the market in terms of business size, or what percent, kind of where do you find most of your clients?
Yeah, no question, it's Main Street business. So average loan size is between $50,000 and $100,000. We'll do loans as small as $5,000 and as loans as large as about $5 million. Across all different asset classes, SBA loans and equipment loans and so on, and working capital loans. And so we really service just when you think about Main Street businesses, that includes businesses that are extremely healthy, fast growing, that could get a loan anywhere, and are trying to shop for the best rate, and some that might have, not the most ideal profile. They might have, great personal credit, but their cash flow is struggling, or the opposite. Their cash flow is great and their personal credit's low, or they don't have collateral, and so we have lenders that kind of service all the different niches and unique scenarios. I would say the one category we don't service, we don't really have many options for that business owner. It's a true startup. They have no revenue and bad credit. Unfortunately, in all our years of searching, we haven't found a lender who will lend to someone without any cash flow and poor credit, as you can imagine. But besides that group, we likely will have options for that business owner.
Got it. And so if you mentioned the institutions, the large banks, we figure that their underwriting criteria is fairly streamlined. Do you also have, kind of as funding sources, I guess, private debt funds that can do things that are a little bit more outside the box of a traditional institution?
We don't. I mean, we might have one or two here or there where, real specific niche type, loans that we might work with, but primarily because we're doing so much volume. Like, last month we did probably 4,500 loans on our platform, and so much of what we do is built into our machine learning and AI technology that we've built, that really we've identified, these lenders. We know we have very, very deep information around what type of loans they fund and what loans they don't fund, based off of credit score and revenue and geography and average daily balances and whatnot. And those debt, those other groups, the private groups that you're talking to, it's not really formulaic in the way that they underwrite.
Mm-hmm.
It's kind of deal by deal, which makes it inherently difficult to build technology and science around, right?
Mm-hmm.
So there might be scenarios where we've got a borrower and it's a one-off, and we might look at trying to go through one of those partners to help them, but it's definitely the exception. It would be very few and far between.
Got it. So it's the business that's been around for some time, generating cash flow, can demonstrate that through their financials, and as opposed to just walking into their bank or calling up their bank, when they go through your system, they're reaching out to, I'll make this number up, 20 different. They have the possibility to match with 20, 30 different institutions. So it's just like
Right.
a way more efficient.
Yeah. You could go to, you're searching for a flight from wherever, to, and you could go to Delta, and you could go to American Airlines, and you could go to Southwest, and you could go to United, and you could try and do it all on your own. You could try and search and write down the price and then go to the next one, or you could go to Kayak.
Mm-hmm.
And so we're all used to, using these marketplaces, whether it's Airbnb or whether it's Amazon or whether it's Yelp or, any of these, Expedia. Same thing for these business owners. They are so busy running their business, and they're experts in their business, but not necessarily experts in loans. So we save them all that headache. We do all the research on the back end. Especially right now with this coronavirus talk and other things, certain lenders are saying, okay, we're not going to lend in the state of Washington because we can't, assess risk, or we're not going to lend to this industry, or that industry. And to try and have a business owner navigate this, is impossible to navigate through all that. We do, and then we make it easy. Well, you're in Washington. Well, okay, we're not going to push you to this lender because they just paused lending in Washington. But these other four lenders are really active, and so our technology does all that work. the legwork to help that business owner, navigate.
And so you've been, as you mentioned, growing consistently. You're leading, sizable organization now. Um, what are some of the things that you pay attention to as you're growing a business? When you think about like the company culture and just keeping recruiting the right talent and keeping them. Could you shed some light on kind of some of the things you think about in order to optimize recruiting and retaining talent?
Yeah, so culture is, I believe, you focus on your customer, you focus on your team, take care of them, and really, that will solve a lot of problems. Um, and then not only solves problems, becomes a unique differentiator for you. At Lendio, we were just named by Glassdoor as one of the top 50 cultures in the United States. That comes from anonymous reviews of our team members. We've won, Utah's best places to work, and we just have this incredible culture of people that are humble and hungry, and also want to be a part of something that is meaningful, that is mission driven. That's, we all want to be part of something bigger than ourselves. Um, so this culture is built, it's not built off of perks and t-shirts and snacks and ping pong tables. It's built off of winning. It's built off of being mission driven. And then it's built off, we call it the CEO of your job. I believe, you find people that are so passionate about what they do, that they're going to be thinking about on nights and weekends, and in their drive and in the shower or whatever. Not because we want them to be workaholics, but if they're thinking about it all the time, they're going to be problem solvers, and they're probably likely going to be really good at whatever it is they do. And then we give them ownership of their area, and then get out of the way. We really like to empower our team members, and really, because people want to feel ownership and feel, they're solving problems. And so, and then the other thing is we don't settle. We talked about this in our leadership meeting the other day. Like, we have really, big hiring plans this year. We last year we went from 150 employees to 310. We'll probably go to 450 this year, and so we want to grow. There's a lot of areas we're investing in, we're excited about, but that means sometimes you settle on the type of person you're trying to hire. I need to fill this position, I think our team's done a really good job of not settling. And so, anyways, culture is a really big part of the things we think about. And then, so we have this balance of strategic thinking. Every single team has, what do we need to accomplish in the next 1 to 3 years, versus what do we need to accomplish in the next 1 to 3 weeks, and that balance. And I think our team, we've figured out some operational cadence things that help us balance. So we are thinking, forward thinking, but also managing the day to day. And there's some things we've done that I think have been really valuable and help us balancing those things.
Mm-hmm. And speaking of not settling, for the entrepreneurs and the executives in our audience, sometimes they appreciate hearing about the tough times in business. Is there an example of kind of along the way where you faced an obstacle but were somehow able to overcome it?
Oh man, we have unfortunately the show is not long enough for me to go through our mistakes we made. Early on, we ran out of money. We couldn't make payroll. At one point in our career, my co-founder and I, this is really the second business that we started. We had a company that was the predecessor to this, where we made about every mistake in the book, but we built that predecessor company up to 10 million in revenue, and we were trying to figure out how to make the business model work, and it, even though we kind of figured out how to grow, we kind of hit this plateau and realized this business model is completely flawed. And we started on nights and weekends thinking about, we got to make a pivot to this thing, and we came up with this concept in February 2011. And what what eventually became Lendio. But we shut down our old business, going from 90 employees down to 8, going from 10 million in revenue to 0 overnight,
Mm.
and restarted and kind of this full pivot and recap, and launched Lendio in 2011, and it was the most painful experience ever. It was so challenging, and just to you think you've got these plans, but you go from a lot of revenue to 0. Now we have cash flow problems, and to have that big of a layoff, because we really shut that old business down. It's just never fun. It's not. I kind of committed at that point. We're never going to put ourselves in that position again. And it wasn't because we had to do the layoff. We the business was operating. It was just because we knew that the former business wasn't going to continue to scale, and we couldn't run both, and we just felt like it was the best decision to shut it down. And so, challenges we've had along the way, where we were raising around, and we're literally 7 days away from closing. I'm on vacation, and I get a call from the group that's leading the round that because of a research report that we had 0 control over, and that actually the research was completely inaccurate, but because of this third-party research report they did in their due diligence, they were going to pull out of the round. And I mean, just can you imagine how devastating that was when you're a few days away from closing, and you've spent 6 months raising money and to lead up to that. Now you got to start over, and you got to really think through, okay, what happened, why, is it us, or is it? Unfortunately, it wasn't us, and we were able to pull together around pretty quickly thereafter. But we've just gone through every business. You go through so many of these challenges that really define who you are, and you can't get too high and you can't get too low. It's all, you got to enjoy the journey, and we've had our fair share of those near death experiences and those really, really painful moments.
Hmm. And when you switched from the prior business to the current one, um, that's a really tough decision to make. To basically go from 10 to 0, 10 million revenue to 0, and lay off a bunch of people. How did you know, right? Because one could think, well, we're generating 10 million a year, so that's pretty good. A lot of businesses can't get to that level. So how did you know that it was the right decision to pivot?
Yeah, a few things. The business that we built was not really built around technology. It was a lot of people providing services to our customers, and so it wasn't scalable. It was being held together with duct tape and super glue and bubble gum. And so that's first off. The second off, so I knew it wasn't going to, like, hitting 10 million was a miracle, and I knew it wasn't going to scale much beyond that. And secondly, the customer experience, not because of intention, but was not exactly what we felt like we wanted to build. Because it's not built on technology, it's built on a bunch of people providing services. That means that people aren't predictable a lot of times, and the quality of the services isn't there. And then you start to have people say, "Well, I paid for this and I got that," and it's hard to control that. And so that was some struggles. The pricing issues. We just had a lot of things that, like, we had great intentions to build this great business that delivered value to our customers. And what we did is we just went through a PhD class on a lot of things you shouldn't do, and but it was so painful, but such an amazing learning experience, where we took a step back and we said, okay, this is the reality of the business that we built. what are the things, if we had a magic wand, what are the things that we would change? What would make a scalable business? What would make, a business that, you're not dependent on these people? What would make a business where the pricing is right? And so we started really crafting the idea around Lendio, because of all these painful things that we built and we found ourselves in. And so I wouldn't trade it for the world, because now we have this amazing business that was growing and has the opportunity to be 10 times bigger than we are today, at least. But I think it's because, I truly believe it's because the pain and those really difficult times that we learned from the business that we had before.
And one thing, it's really interesting. There's a lot of, this has been happening for some time, but there's a lot of, very talented entrepreneurs that come out of Utah, and a lot of great businesses based in Utah. And recently, there's been some light shed on how kind of folks in the LDS community have a really great experience early on in their young adulthood, and that's through the missions that they go on.
Yep.
If you wouldn't mind, could you shed some light on how maybe going on a mission has helped you overall in life and as an entrepreneur?
Yeah, so part of the culture, of the Church of Jesus Christ of Latter-day Saints is, this encouragement. It's not a requirement in any way, but the encouragement to be able to go and spread the gospel, through serving a mission, which it means for 2 years, you really leave your home, you travel to a foreign land, whether it be in the United States or outside. In my case, I served in Uruguay, down in South America. So I went to this third world country. You really leave behind, I played college soccer. I left that behind for 2 years. You leave behind your studies, your family, and you're going out and you are, going door to door and and you're serving. Your whole 2 years is service. It is teaching, and it is studying, but it's really just about others. You're really losing yourself in the service of others is what you're supposed to, the goal. And it is hard. Can you imagine you're an 18-year-old and you grew up, and 18-year-olds are spoiled. Their whole life is about them. And you turn around and you're losing yourself, and it's not about you. And you're meeting these amazing people. So you have to get outside your comfort zone, and you're talking a new language in this foreign country. And you have to work like it's the hardest work you'll have ever done up until that point in your life, because you're going door to door every day, waking up early, and it's really dedicated to that. It's not a normal lifestyle. So it was such an amazing experience for me that changed my life forever, just to learn how, one, to work hard, to interact with people. You learn about people and different cultures, and learn to appreciate things outside of your small little bubble that you grow up in. You learn about service. You learn about, I can't even describe what type of experience that is. And so for me, it was life changing. I know a lot of people that feel the same way. It's not that same way for everyone. But it is part of our, here in Utah, not everyone is quote unquote Mormon or members of the Church of Jesus Christ of Latter-day Saints, but there's a high percentage that have gone on missions that are comfortable getting on the phone and talking to people. So from a customer experience standpoint, from a work ethic standpoint, it really is ingrained in kind of who we are and how we try and build a business.
Yeah, it really does seem like you learn a lot about resilience and getting outside of your comfort zone.
Yeah, you get the door shut in your face day after day after day, and people telling you no and spitting on you in the streets, and just like shunning you. I mean, it's definitely an experience of overcoming challenges for sure.
Maybe, given how stressful, the whole experience of being an entrepreneur can be, and maybe what we could do is close out with how you recharge, how you make sure that you have, the right level and kind of energy, to approach your business each day.
Yeah, great question. One I'm extremely passionate about. I think early on in my career, you just think you can fight through anything, and you can work 24 hours a day and just get through it. I'm married with my wife, and I've been together for 17, or is it coming up 16 years? Coming up on 17. We have 4 kids from ages 14, 12, 10, 5. And I truly believe that I can, if there's balance in my life, I will be a better leader, a better entrepreneur. And so what I mean by that is, date night on Friday night with my wife, time with my kids. Whether that's going to their soccer games or coaching their games, or football, basketball, or dance, or gymnastics, or it means for me early morning. I have a personal study, kind of scripture study or meditation time on my own, where I can really be, introspective and thinking about how I can be a better person. I also do morning workouts. I'm playing basketball, really competitive basketball, early mornings 3 times a week, or I, get to the gym with a little bit of weights, and those things, and in eating right, those things, where if you think about this balance of, there's the work ethic, but then there's the physical health, there's the mental and emotional health, there's the relationship side. And if that stuff is in balance, when I am at work, I strongly believe that I can be way more effective in 8 to 10 hours a day than I can if I'm spending 12 to 14 hours a day. And I think I'm a better leader, and I think there's benefits to relationships with partners and people at work and coworkers and things like that. So, and then you can sustain it. For a long, long, long period of time, you don't get burnt out, and so I have my own. Everyone needs to kind of figure out what their own path is, and what works for me doesn't work for everyone else. But I've kind of found now, after I've been at this a while, how I can be, mentally and emotionally happy, and be extremely effective in my time at work, and what we're trying to do here at Lendio.
Well, Brock, this has been a great conversation. Really appreciate you taking the time.
Yeah, RJ, thanks for having me. I really appreciate it, and appreciate what you guys are doing, and look forward to listening to more of these podcast shows.
Excellent. Thank you.
Okay, thank you. Take care.